Hi, everyone. How are you? Hope you are well. So, today we're going to talk about Redfin, the Redfin report that came out, and some latest predictions regards to the housing market. So, I am a licensed realtor. I'm also a real estate investor. I have multiple properties, and I have a doctorate in pharmacy. So, we're going to talk about the housing market, what is going on. So, the mortgage rates are back to increasing up again. They're at 6.8%. They were at the low sixes for a while. So, now they're climbing back up 6.8%. And so you know what when the mortgage rate is high, that means higher monthly payments. So that is what is going on. The mortgage rate is climbing now. It's back up, it's up to 6.8 as opposed to the lower sixes. And so housing affordability is not affordable, as you know. Um, so it is They're saying in the media that the affordability rate is just as bad as it was before the housing bubble in 2007. So these are the predictions. There are several different companies who have done predictions, and I'm just going to tell you what these predictions are in regards to the mortgage rates, where they expect for this to go. So, according to the Mortgage Bankers Association, they project that the mortgage rate will be at 5.2% by the end of 2023, and a 4.4% in 2024 and 2025. Bank of America, they are predicting a 5.25% by the end of 2023. Morgan Stanley, they are predicting a 6% by the end of 2023. Fannie Mae, they are predicting 6.3% in 2023, 5.7% in 2024. Freddie Mac, they are predicting 6.4% in 2023. Moody's Analytics, they are predicting 6.5% in 2023. Goldman Sachs, they are predicting 6.5% in 2023. Realtor.com, they are predicting 7.4% in 2023. So as you can see, these predictions are all over the place with the different companies. As you can see, Realtor.com, they're predicting that it's going to be even higher than it is right now. Whereas other companies are predicting that it's going to get better, that it's going to go down to 5.25 by the end of 2023. So we will see who is right. By the end of 2023, will it be 7.4, like Realtor.com is saying, or will it be 5.25, like Bank of America is saying? So again, the predictions are all over the place. So as you know, housing is less affordable now because of the interest rate. High interest rate means higher monthly payment. So I am hearing out here that people are saying that realtors are just trying to push you into buying a house because they're realtors. Me, for example, I'm a realtor, and I'm not trying to push you into buying a house. I know you're not buying a house from me. What I want is I want the best for you. That's what I want. So that's why I come on here and I am reading what is going on with these mortgage rates. They are changing every day. I just stated they have drastically increased 6.8, where they were 6%. So you really have to do use your own discernment and your own judgment when it comes to who you're listening to. And of course, you're going to listen to yourself. Listen to your own inner self. What is your own inner self saying? So as when it comes to, should I buy now or should I wait? A lot of people are not buying right now. They're not buying right now. But My suggestion, not advice, my suggestion is to buy when you see the right property that gives you the right monthly payment, that you're going to know what that monthly payment is going to be before you purchase the house. And so if you look at the monthly payment and it's outrageous, then of course you're not going to get that house. But if you look at the monthly payment and this is comfortable for you and you're getting the right property, then I would consider it, especially if you can afford this monthly payment, you can afford to stay there paying this for 7 years because this is a comfortable monthly payment for you, then I would get it. A cheaper, a cheaper house with an affordable, comfortable payment that you can afford to pay. You can see yourself living in this house for at least 7 years, paying this same payment. So I would suggest buying when you are ready and buying within your means. So, irregardless of the media, what the media is saying, the interest rates are high today, interest rates are low today, interest rates they're high, now they're low. Now, well, let's wait, let's see how the end of the year goes. Or, you know, instead of all this noise going on, the bottom line is what is this monthly payment? Is it comfortable to you or is it not comfortable to you? That is the bottom line. So, buy when you're ready and buy within your means. So there's also this other thing going on that says you can buy now with the hopes of refinancing later. So that is not something that you want to look for. When it comes to refinancing, you need equity to refinance. And it's going to take time to build up that equity. That equity doesn't happen right away. So you don't buy with the anticipation of refinancing later. You buy something that is a fixed rate and it is comfortable to you right now when you're looking at it right now. You don't buy with the hopes of refinancing later. So when you refinance, what you're doing is essentially you are starting all over. So, say for example, you've been paying down this mortgage for 3 years, for example. So when you refinance, you reset that whole clock. And then you're also paying more years paying interest. So you have to really think about that when you think about refinancing. It's not something that you buy and refinance later. That's that's not a strategy that you should even be considering. Buy now and refinance later. Because, like I said before, you need equity to refinance in the first place. And more than likely, you're not going to have equity because you need to be in the home for a long period of time, at least a year, to acquire equity. And then also, when you refinance, you are starting all over again. So the bottom line is you see this monthly payment before you buy this house. Is this comfortable to you or is it not? And that is your determining factor. So getting a cheaper house, making sure that you're not overpaying, of course, and then buying it when you're ready and it is within your means. So what's going to happen is that these mortgage rates are going to fluctuate. Eventually, inflation will get better, but it's going to take a longer time than what we are anticipating. And so this waiting around, that's really up to you. But my thing is that you've been waiting for 50 years. It's time to make moves now. So the current situation is not a hurry for you to buy a house. You know, you do whatever you want to do and then listen to your own gut. What is your own gut saying? If you are a real estate investor, you're going to be buying now. You're going to be buying smart because you're buying something cheaper. You're buying something within your means. You're buying something that monthly payment is comfortable and you can pay this for 7 years straight. You're buying this year, you're buying next year, you're buying the year after that, and you're buying the year after that because you are a real estate investor. So that is what I wanted to say. Make sure that you get a fixed rate, whatever you do. Um, don't get a variable rate. Variable rate is going to get you in a lot of trouble. Make sure that it is a fixed rate. As far as home prices go, home prices are falling. They're falling more in certain areas as opposed to other areas. Like the Midwest, it's just falling a little bitty, tiny bit. So it depends on where you live according to the home prices falling. So again, the interest rate is connected to the monthly payment. The lower the interest rate, the lower the monthly payment. So again, that is the bottom line. What is your monthly payment? Is it affordable to you? Is it comfortable to you? That's the bottom line. All right. So if you like the channel, please hit the like button. It helps the channel. If you're not a subscriber, please hit the subscribe button and the notification bell next to it so that you won't miss the episode. Also, leave a comment. Let me know your thoughts. Are you going to buy now or are you going to wait? Leave a comment. Let me know your thoughts. If your decision is to wait, then this is a great time to get your credit together because, as you know, you don't want to buy anyway if your credit is not together. So the first step is getting that credit score together so that they are not overcharging you. So that's the first step. Get that credit score together. All right. And then buy your freedom. And you buy your freedom by buying property. You're not going to be a slave forever, right? Freedom, buying property. All right. Thank you for watching. Also, check the link below if you're not in the stock market. This is a good time to get in the stock market. Stocks are low. They're heading downward. And what do you do with stocks? You buy stocks when they're low. Stocks are low right now. Check the link below if you're not in the stock market. And if you are interested in building a rental portfolio, check the link below for the group. All right. Thank you for watching. Have a good rest of your night.